All right, guys, welcome along. I hope you're good. Now, today we did a live stream, and this was in the New York AM session. We're now in the New York PM session. We still have no news. Our next piece of USD volatility is going to come tomorrow, 1:30 UK time, which will be 8:30 Standard Eastern time. So I am expecting generally some volatile movement after this news event. This month, actually, I do think this month has been really crap in terms of price action. We've been unlucky this month, but when you look at where we came from in terms of April, this was a recovery month to kind of get us back up to here. You want to be trading generally in direction with, you want to be trading outside of clear point of interest areas. And we haven't had really, or I don't think I've seen much since the other week when I took a position last, and I've been very, very, very patient waiting for the right opportunity. Now, just looking at this daily right now, we have got a sweep above this high right here. Let me just alter the style on this. But we're actually respecting this daily area here. And actually, we're creating, as it stands, we've got another hour and 53 minutes till this daily candle closes, but we're actually, on top of the fact that we're going to have this divergence, we've got a swing point candle here. We've actually got one forming as we speak. So I do believe this has got a lot of scope to come lower, at least to see if we can rebalance into some of this fair value gap or fill in this gap. That is what I would like to see the stock market do next. And then I want it to go higher. Because if it's the reason the stock market is the easiest to trade is because typically it's just bullish. So it's just a matter of time before you wait for bullish price action and you just trade longs. When you're trying to trade it bearish, you are kind of still going against the grain. So I feel like there is definitely scope for us to take this lower based on the things we're currently seeing at the moment, but we need to obviously let these candles close and finish where they are, because we could have a massive spike and then attack this candle here. So in terms of what happened, obviously we had CPI, huge push higher out of this order block, pushing higher out of this order block here. And then again, with regards to the S&P and the Dow, again, you can see slightly different price action, slightly different behavior, which is currently going on because the Dow is really forcing its way lower. There is every chance that the Dow is coming lower into the discount area, and the S&P and the Nasdaq will actually just consolidate to essentially wait for something to happen. And then what we might find is that we get some form of liquidity sweep before actually pushing price in its intended direction. Now, where we were looking today was in this 4-hour, the 3 p.m. 4-hour candle, which is the 10 a.m. 4-hour candle if you're in New York Standard Eastern Time, whatever it's called. And when we were trading inside of it, we want a sweep of the previous 4-hour candle before anything happens. Let's just simplify this whole thing. If we look at the 11 o'clock candle, that's UK time, and then we look at the low of that candle. When this candle opened at 3 o'clock, which is again 10 a.m. Standard Eastern Time, we opened, we come lower, and then we pushed higher, and then we finished lower. So the move you could basically capitalize on is that, because it swept a previous 4-hour candle's high. Vice versa, if you're in the London session, this is your candle, the 7 a.m. or the 11, but you realistically the 7 a.m. candle, because you can see that it opened, it pushed higher, and it actually attacked the previous 4 hour low. So that's an Asian session sweep. So again, your opportunity would have been inside of there. So if you now go down, you should be able to see and note that that's the candle. This is the push higher. This is your ATM candle, your high, and then it obviously attacks that liquidity low. If you look at this from a 50 or an hourly perspective, a 15-minute perspective, sorry. Again, the move really is above the Asian session, one standard deviation, break, and there is a fair value gap you could have potentially taken an entry off of, which may not have given you the risk reward, because basically the only thing you're looking to target is the Asian session low. But that's how you could essentially capitalize on that. Now, it would make life a lot easier if, where are we? Here. If there was obviously divergence as well, which it looks like there was, you know. So you could have also maybe looked for a 5-minute inverse, but again, that was a very big move lower and then an obvious fair value gap. And then again, look what happened. The second it took out the candle's low, it pushes to the upside. So that's how you can engage in the London session. It's the exact same thing for the New York session. So the 4 hour candle is almost as important as the daily candle, because it's just simplifying what happens with the sessions. So if you look at today, it pushed higher. Now, let me just try and see that. If we just get rid of London here for a sec, and we just focus on what happened when it swept that high. If you go down to the 15-minute, which is where we were looking, and if you remember, we were working out of we were saying that we were inside that area there, weren't we? So we were bullish because we hadn't broken this. Now, when all of this was going on, this was when the window that we traded in today was here. So it was here. And I think we come offline about, let's say we come off an hour later. For example, this plain box is when we were, in fact, that's a bad one. Let me put it inverse. That plain box is when we were trading. Now, the 4 hour low, bear in mind, this is the high right here. If we go to this low, we never actually attacked that low. So if you look at this from a 15-minute perspective, or even a 5-minute perspective, what you'll see is that's the 4 hour low. That is the 4 hour high. 4 hour low, 4 hour high. When we were trading, we were inside the high and the low of that previous 4 hour candle, which made everything low in probability. So a lot of people were looking for this 5-minute sell. I know a lot of you took it, but there was a couple of things wrong with it. I mean, the thing is, we were bang on to rights with the standard deviations. We had divergence. We had an inverse. We had a fair value. We had a balanced price range. We were above the New York opening price. So there was a lot in its favor. And generally, I do believe if you took those entries all the time, you would still be profitable. Like, I generally believe that. But when you get really, really good at this, you want to try and get this right. What you'll see is this wasn't the trade to take. And even though you probably could have got break even, potentially, could have swept that low, whatever. We could have definitely got a 1-to-1 out of that low. But we hadn't swept the previous 4 hour high. This is the liquidity. That high is the 4 hour high. So your trade, if you were in here and your stop loss was here or your stop loss was here, and you were targeting, I don't know, 1 to 2, whatever, your stop loss was the 4 hour high being swept. That was that you, in this situation, you were liquidity. And that is where it went wrong. Now, again, if you look at the 4-hour high, never actually got swept on S&P, but it did on the NASDAQ. And then it created this very low probability looking break of structure, which happened kind of in the opening to the PM session in the inverse. So you could have got in there and you could have definitely got a 1 to 2 out of this. And then if you were waiting for a 15-minute break, you could be in here based on this inverse or something, or it was actually that one there. And maybe you're in this trade now, but you're probably in drawdown because your stop loss is here, your target's down here. But it's not as high in probability anymore because we've now got a new 4-hour candle printing. So if we delete everything now and we actually look at where we are in price, because this is a live session happening right now, the New York PM session. And you can see where are we currently, because that is the 3 p.m., which is the 10 a.m. Standard Eastern Time candle. So where are we now in relation to that high and low? We're in the middle of it. And because we're in the middle of it across the board as well, because we're now in the middle of it, there is nothing in this situation that we can do. We have to wait for this 4-hour to basically sweep a high and then offer us a move. Now, the higher probable moves happen when the session open is near enough at the high or low, and then it sweeps early on, and then it moves. When it opened, we had a huge port of liquidity. There wasn't a lot going on. And it's slow moving because when we refer back to this news calendar, there is nothing happening today. So there could be volatility at any moment because that's the way the markets work, but we don't know when the volatility is going to happen. Tomorrow, we know there's pound news at 7 a.m. So we're expecting the pound pair to be volatile at 7 a.m. So tomorrow, London session, pound, I would be looking at the 7 a.m. candle that prints. So you could literally go onto a pound pair and that candle, that 7 a.m. candle, look at it if you're trading the London session. And then we've got 1:30, which is 8:30 a.m. Standard Eastern Time, New York time, and 8:40 Standard Eastern Time, New York time. So I'd expect a nice big candle for the 11 a.m. candle. But then that should set us up for a nice 10 a.m. New York time candle. Sweep above it, create all of the other confirmations that we talk about, which is making sure we're within the deviated ranges, making sure that we're trying to identify if we're bullish on the higher or lower time frame. So for example, if the volatility tomorrow takes us down here in a bullish setting, and the 4-hour candle happens to be, so for example, the way that would look, let me just do this in kind of overextended mode here. Let's say this candle right here tomorrow happens to be your news candle here. Let's say that this is Powell speech's candle tomorrow, for example, right? And that's the way that candle closes. So the next candle is going to open at 3 p.m., which is 10 a.m. Standard Eastern Time. It's going to come lower. It's going to sweep that low right there and then move higher. That then turns into a blue candle because I don't like red and green candles. And then what you see behind there is a wick. So you're trying to get involved in this move here at 10 a.m. between 10 and 10:30 New York time. And you would likely see a move and an opportunity which will get you into the markets at that point. That is how to, and if this is the Asian session, then this is your 7 a.m. candle and you're looking to get into a move around between 7 and 8 UK time, 2 and 3 AM New York time. So being involved in an area of interest. But at the moment, because we've had CPI this week and we've just been exploding higher and we've been consolidating, because you can't expand and expand and expand, you have to consolidate for a little while and then hopefully it'll retrace, bring us into a bullish format and then push higher. And you're basing it around these 4-hour candles. So right now, my preference would be to sell because we're above this New York price on a smaller time frame, but I would realistically want to see 4-hour high and lows at any point get swept. I don't mind seeing divergence, like one of these pairs can sweep and the other ones respect it, and then we sell off. It's important that you get the opportunity after it's happened. So again, if you go to a 5-minute time frame, once it's swept the high up here, which was a lot of people's stop losses today, this inverse would be your entry, because you also had very strong divergence playing out because this 4-hour candle was not swept. And then you actually had a stronger move on S&P because of that fair value gap right there. So that's the entry, that's the sell-off that you want. We need the same thing to happen here in a bullish format, in an example, during the London or the New York session. That is how to basically handle PO3 on the 4-hour candles. You can do it on the 1-hour candles as well. The daily candles, of course, are important, the weekly candles, but the 4-hour is a nice little cheat code because it just gives you that. It's just helping you break down the sessions, if you like, because essentially the likelihood is that the 11 a.m. candle UK time is the London session high or low. So if this is the New York session that happens after 3 o'clock, which is 10 a.m. New York time again, you might get a sweep lower. That could be taking the London session low. That's a significant area of liquidity. If it happens in a point of interest area, and if your opening price is up here somewhere and you happen to be below it, then you could take advantage of this move. Get a nice 1 to 2. You don't even want to try and target the 4-hour high. Just get a 1 to 2 out of the market. Do that consistently. Make sure your other rules are in place and you will thrive in this industry. So go and backtest it. And I would say the best way to backtest it is this way. So in fact, you could even just open up a full chart here and just go back to so if you want to trade the New York session, just mark up the 3 p.m., which is if you're over the pond, it'll be the 10 a.m. candle, that one there. See if it's swept the high. So yesterday was just a non-trading day because it just pushed higher. It didn't move lower or anything. It just swept the high and carried on. If we go over to this one and we actually observe that particular candle there, Monday, 3 o'clock, we sweep that high inside a key point of interest area. So you could potentially go onto I don't want to go into replay mode, but you could go into your replay mode and it's frozen on me now. Here we go. You can go into replay mode and you can investigate what actually happened once it did that. Was there an entry that played out? Inverse fair value gap, you could have potentially got in there or something like that. Didn't look like it was in with any other confirmations because we already pushed above and we hadn't swept the Asian range, because you always want to sweep the Asian range, but it's another story for another day. We're not focusing on that right now. So then again, you just carry on moving back. You go to the next 3 p.m. candle, sorry, and just mark them out and see how many of them can you spot entries inside. So like that candle there was Wednesday, set the 7th of May, 7 o'clock, which was 2 p.m. Standard Eastern time. Wouldn't be surprised if that was in line with news, because a lot of your high probable candles will be in line with news events. So you can see right here, we swept just about under that candle and then pushed higher. Go and have a look at your candles and let me know in the comments or let me know in the chat, whatever, if you get success and you can basically see how many entries within how you want to trade are actually are actually there, if that makes sense. And I guarantee you're going to see a lot of confidence in your setups.